Welcome back to the most eye-opening car insurance experiment ever conducted in Texas. I'm Alex, and if you missed part 1, I bought both the cheapest and most expensive car insurance policies I could find to see what you really get for your money. The cheap policy costs $24.50 per month, the expensive one costs $387 per month, and what I'm about to show you will prove that the difference between these two isn't just about money, it's about whether you survive financially when the worst happens. Today, I'm going to walk you through 3 real accident scenarios that happened in Texas this year and calculate exactly what each insurance policy would pay versus what comes out of your pocket. But first, I need to tell you about the phone calls I made that changed everything. Last week, I called both insurance companies and pretended to start a claim. I told them I had been rear-ended at a red light, my car had damage, and I thought I might have whiplash. The difference in how they responded was shocking. When I called the cheap insurance company, I was immediately transferred to a call center in another state where the representative read from a script and kept asking me to repeat information I had already provided. They told me it would be 3 to 5 business days before an adjuster could look at my case. And when I asked about a rental car, they said I would need to pay for it myself and get reimbursed later. Maybe. The expensive insurance company? I was connected to a local adjuster within minutes who took detailed notes, scheduled someone to look at my car the next day, and arranged for a rental car to be delivered to my location within 2 hours. They also connected me with a nurse hotline to discuss my potential injuries and recommended medical providers in my area. This is where you start to understand what you're really paying for with premium insurance. It's not just higher coverage limits, it's an entirely different level of service when you're at your most vulnerable. But let's get to the real test. I'm going to show you 3 actual accident scenarios and break down exactly what each policy would cover. Scenario 1 happened to Jennifer, a 28-year-old teacher from San Antonio. She was driving to work on a Tuesday morning when a delivery truck ran a stop sign and slammed into the driver's side of her 2020 Honda Accord. The impact was so severe that her car was totaled instantly, and she was taken to the hospital with a concussion, broken ribs, and severe bruising. Let's calculate the cost. Her car was worth $22,000 at the time of the accident. Her initial hospital visit cost $18,000, including the ambulance ride, emergency room treatment, CT scans, and overnight observation. She missed 6 weeks of work recovering, which cost her $4,800 in lost wages. Her follow-up medical appointments and physical therapy added another $8,000. The total cost of this accident was $52,800. Now, if Jennifer had my cheap insurance policy with state minimum coverage, here's what would happen. The liability coverage from the truck driver's insurance would pay $30,000 maximum for her injuries and $25,000 maximum for her totaled car. That's $55,000 total, which actually covers this accident barely. But here's the problem. The truck driver also had minimum coverage because his employer was trying to save money on insurance costs. So Jennifer would get $30,000 for medical bills against $54,000 in actual medical costs, leaving her $24,000 in debt. She would get $22,000 for her totaled car, but she still owed $19,000 on her loan, so she'd have $3,000 left to try to find another car while still making payments on the destroyed one. Total out-of-pocket cost for Jennifer, even with insurance covering the accident, would be over $20,000. This is exactly the situation that destroys families financially. Now let's see what happens with the expensive policy. If Jennifer had been driving with my premium coverage and the truck driver hit her, the expensive insurance company would immediately step in with something called uninsured, underinsured motorist coverage. This coverage pays when the other driver doesn't have enough insurance to cover your damages. Her expensive policy would pay the full $54,000 in medical bills, plus her $4,800 in lost wages, plus they would pay off her entire car loan and give her money to buy a replacement vehicle. Instead of being $20,000 in debt, Jennifer would be made completely whole. But that's not even the most shocking scenario. Scenario 2 involves the Martinez family from Houston, and what happened to them reveals the darkest secret about cheap car insurance. Carlos Martinez was driving his wife Maria and their 2 young children home from a family barbecue on a Sunday evening when a drunk driver in a pickup truck crossed the center line and hit them head-on at 45 miles per hour. Carlos suffered internal injuries and a broken leg. Maria had a traumatic brain injury and was in a coma for 12 days. Their 8-year-old daughter broke her arm and had severe cuts from broken glass. Their 5-year-old son had internal bleeding and required emergency surgery. The drunk driver had minimum insurance coverage because, unfortunately, people who make poor decisions about drinking and driving often make poor decisions about insurance, too. The total cost of this accident was catastrophic. The ambulance and emergency room costs for all 4 family members totaled $68,000. Maria's 12-day hospital stay and brain injury treatment cost $240,000. Carlos missed 4 months of work while recovering, costing the family $22,000 in lost wages. Their destroyed vehicle was worth $31,000. The total cost was $361,000. With minimum coverage from the drunk driver's insurance, the Martinez family would receive $30,000 for Maria's life-threatening brain injury, $30,000 for Carlos's injuries, $30,000 for their daughter, $30,000 for their son, and $25,000 for their destroyed car. That's a total of $145,000 in coverage against $361,000 in costs. The Martinez family would be left with over $200,000 in debt from this accident. This is how families lose their homes, declare bankruptcy, and have their lives destroyed by drunk drivers who chose cheap insurance. But if the Martinez family had been protected by the expensive policy's uninsured motorist coverage, every single dollar would have been covered. The $1 million liability limit would easily handle the entire accident cost, and the family would receive additional compensation for pain and suffering. Even more importantly, they would have access to case managers who specialize in catastrophic injuries, helping coordinate care and ensure the best possible recovery for Maria and the children. But the third scenario is the one that's going to keep you awake tonight because it involves something that could happen to any of us and reveals the most dangerous clause hidden in cheap insurance policies. Rebecca was a college student from Austin driving home for spring break when her car hit a patch of black ice on a bridge and spun out of control. Her car crossed the median and collided with an oncoming SUV carrying a family of 5. The other driver was seriously injured, his wife broke her neck, and their 3 children were hospitalized with various injuries. Rebecca walked away with minor cuts, but what happened next destroyed her family's financial future. The total cost of injuries to the other family was $850,000. Rebecca was found to be at fault for the accident due to driving too fast for conditions. Her cheap insurance policy had $30,000 in bodily injury coverage per person and $60,000 total per accident. Against $850,000 in actual damages, her insurance company paid $60,000 and then sent Rebecca a letter that changed her life forever. The letter informed her that she was personally responsible for the remaining $790,000 and that the other family was already taking steps to garnish her wages, place liens on any property she might own, and claim any inheritance or assets she might receive for the rest of her life. This is the terrifying reality of driving with minimum coverage in Texas. You're not just risking your own financial future, you're risking your family's future, your parents' future, and potentially decades of financial hardship that can follow you for the rest of your life. But here's the most shocking part. Rebecca's cheap insurance policy had a clause that most people never read that actually made things worse. The policy stated that if she was sued for more than her coverage limits, the insurance company was not required to provide legal defense. So not only was she on the hook for $790,000, she also had to hire her own attorney to defend against the lawsuit, costing her family an additional $50,000 in legal fees. Meanwhile, if Rebecca had the expensive policy, her $1 million in liability coverage would have completely covered the accident with money to spare. But even more importantly, the expensive policy includes something called supplemental legal coverage that would provide unlimited legal defense even if the damages exceeded her policy limits. The insurance company would have had her back no matter what. This is when I realized that we're not really comparing car insurance policies. We're comparing 2 completely different approaches to financial protection. The cheap policy is designed to meet legal requirements and nothing more. It's financial protection theater that gives you just enough coverage to legally drive while leaving you vulnerable to complete financial destruction. The expensive policy is designed to actually protect you and your family from the financial consequences of car accidents, no matter how severe. But I still had one more test to run, and this one was going to reveal the hidden costs that make cheap insurance even more expensive than it appears. I decided to dig into the claims handling process and find out what really happens when you need to use your coverage. What I discovered about the cheap insurance company's claims process will shock you, especially the automatic denial system they use that rejects 40% of claims initially, hoping customers will just give up. And I found something even more disturbing about how they calculate settlements that could leave you thousands of dollars short even when they do pay your claim. Next week, in part 3, I'm going to show you the phone recordings from my fake claims, reveal the settlement calculation tricks that cheap insurance companies use to underpay claims, and walk you through the most important decision any driver will make: how to calculate the real cost of insurance when you factor in the risk of being underinsured. I'll also reveal the 5 questions you must ask any insurance company before buying a policy, including the one question that will immediately tell you if you're dealing with a company that actually pays claims or one that fights every claim, hoping you'll give up. But here's what I want you to do right now. Take out your insurance policy and look for two specific clauses. First, look for the legal defense limit clause. If your policy says the insurance company will only provide legal defense up to your policy limits, you could be on your own in a major lawsuit. Second, look for something called a cooperation clause. This is a sneaky provision that allows insurance companies to deny your entire claim if they decide you haven't cooperated fully with their investigation. And their definition of cooperation can be almost anything they want it to be. If you find either of these clauses in your policy, you're driving with a ticking time bomb that could explode the moment you need your insurance most. In Part 3, I'm going to show you exactly how these clauses are used to deny claims and reveal the settlement I was offered when I tested both policies with the same fake claim. The difference in the settlement offers was so extreme that it proves everything I've been telling you about the true cost of cheap insurance. Subscribe and hit the notification bell because Part 3 is going to give you the exact framework you need to evaluate your own insurance and potentially save your family from financial disaster.